To our next conversation, as the federal government prepares to go on a roadshow for the 3 billion Eurobond issuance, there are concerns about how the external community currently perceives the risk in the Nigerian economy. An adverse macroeconomic sentiment means investors will demand a higher yield on the issuance, resulting in an expensive Eurobond. Well, join us now to assess the macroeconomic sentiment in Nigeria and how the risk affects their investment decisions in the country is Michael Ogunremi, macroeconomist at Chapel Hill, Denham. Great to have you, Michael. Good morning.
Good morning.
So tell us, what exactly does macroeconomic sentiment mean?
Well, macroeconomic sentiment is it's simply an economic indicator that speaks to the perception and the understanding of investors on how risky, the economy is. So basically, it speaks to what exactly are the political, what exactly are the economic, what are the business risks in the economy, and how does the investing community perceive the strength or the momentum of this risk and how it affects what it is that they do in the economy. A very good example will be in 2020 when we had the COVID ravaging most of the global economies, Nigeria inclusive. Investors perceive that because of the slow growth coming out of it, it becomes more risky, to invest in developing economies like Nigeria, right? So that's exactly what the whole idea of macroeconomic sentiment is.
Now, one would wonder how this is actually measured. Are there proxies we can look at to speak to, the state of Nigeria's macroeconomic sentiment?
Okay, there isn't any, so you won't find an indicator out there that says this indicator is called macroeconomic sentiment. But just like you admitted, there are proxies that you can use to measure a macroeconomic sentiment. I'll give you just three. The first will be the level and the growth of foreign portfolio investment in the country. When portfolio investment grows over time, it's a good thing as far as macroeconomic sentiment is concerned, because it means that investors are upbeat about the performance of the economy and then they are bringing their money into the country. The second proxy will be business confidence index, which the CBN computes from time to time. The business confidence index pertains more to domestic investors, so it simply shows how well domestic investors perceive the business environment, and that also ties to, the ease of doing business. The third proxy will be the sovereign discount factor. The sovereign discount factor is just like a discount rate that, is used to value issuances of the sovereign. So, for instance, you have a government trying to raise a bond. The sovereign discount factor is what is embedded, to sort of act as a discount rate to determine what price the bond will be issued. Whenever the sovereign discount factor soars, it simply means that investors sort of have a weak, macroeconomic sentiment of the economy, and because of that, they are pricing that into the discount rate. So those are the three major proxies I think you can use to assess a macroeconomic sentiment.
All right, Michael, in your view, how would you assess Nigeria's macroeconomic sentiment, and what are the factors currently shaping it?
Well, currently, I would say that sentiments have been improving. If you look at between January and June, what you notice is we've had some of the indicators I highlighted earlier as sort of shown that the economy has been improving, and we've had macroeconomic sentiments improving. So, for instance, we had about a 43% growth quarter on quarter in foreign portfolio investment into the country in the second quarter of the year. That's a good one, and it simply means that foreign investors sort of have a better view, a better belief in the economy compared to the second quarter of 2020, right? If you also check the trend of the sovereign discount factor, you notice that there has been a dip between January and June. However, lately, I'd say since July, August, we've seen some sort of push up in the sovereign discount factor, which also means that investors are beginning to get weary of the economy. And that boils down to the fact that there are emerging threats, to economic growth. There are also one or two issues around, policy uncertainty, which has sort of led to, the concerns we are now currently seeing in terms of macroeconomic sentiments.
So how will this sentiment affect the pricing of the planned 3 billion naira Eurobond that is happening soon?
It will definitely affect. The pricing of the bond. So the way it works is, whenever government is trying to issue, a bond, investors would normally consider a lot of factors to then determine what price or what yield would be at issuance as at the time the bond is being issued. So because of the fact that most investors, like I said before, are currently skeptical, there's some sort of skepticism they have about the economy as to how fast the economy is going to get back to pre-COVID track. It's most likely that they are going to demand a higher yield at issue because of the weak sentiments that they have. And what that simply means is that, just like I said, all of these factors into the discount rates, factors into the yield that you demand at issue, and it most likely means that the government will have to issue the planned Eurobond at a higher yield, which is expensive.
All right. So, what is the role of the Central Bank of Nigeria in influencing macroeconomic sentiment?
Interesting question. The CBN is about one of the biggest shapers of macroeconomic sentiment, and that is because they stand at the forefront of monetary policy. Foreign investors are in Nigeria, are highly concerned about economic growth. They're highly concerned about interest rates, and they're concerned about the exchange rates. For the last two variables, interest rate and exchange rates, that is where the CBN comes in. So the foreign portfolio investors would always want to see what exactly is the language of the CBN as far as these two variables are concerned. If they express some sort of fear, or if they notice that the CBN is not really going in tandem with what they want to see, they're not going in tandem with their expectation, it most likely means that they would display very weak macroeconomic sentiment. So yes, the CBN is at the front of shaping macroeconomic sentiments through whatever signals they put out at the monetary policy committee meeting, how they carve out their FX policies, what exactly their interest rate stance is in terms of primary market issuances and all of that. And this is where the idea of policy credibility comes into play. As long as the CBN is credible with its policy, it is going to void sentiment in the macroeconomy.
Do you have an outlook in the near term on this?
Well, to be very honest, I would say that I see sentiment improving more in 2022. I think 2022 is the year. And the reason why I'm advancing that is because for the remaining 4 months of the year, the economy is largely going to ride on, the recovery we've seen in the first and the second quarter, of the year. The economy expanded by 5.01% in real terms in the second quarter of the year, compared to 0.51 that we had in the first quarter. So it simply tells a story that the economy is improving, right? And therefore, foreign investors still have that skepticism that the economy is not back to where it was pre-COVID, and therefore they are sort of trying to be very, very careful bringing in investment into the country, and not just even foreign investors, even domestic investors, likewise. And so I feel like 2022 is a year. 2022 is a better outlook to say interest rates will improve, yields will get better, and that would be the year investors will most likely feel that the Nigerian economy is getting back, on track.
All right, Michael, any major, recommendations for the government on how to improve our macroeconomic sentiment?
Okay, so I think I would just give three major recommendations. The first will be in terms of monetary policy. I think about now, it's very imperative for the CBN to send a clear signal, to the market. So when I speak about policy credibility, when I spoke about policy credibility earlier, it boils down to two things. Number one, the CBN communicates to the market why exactly are they doing what they are doing. It's very important to put investors and market players in consideration when they are making these policies. Let them know why exactly they are making the step. The other part of the credibility would be being true to their word. So if you say you're going to do A, just stay with A. Don't pass a separate message, or don't do something that opposes what it is you initially had in mind to do. So I feel like that is the first, and for me, I think that is the biggest recommendation as far as improving macroeconomic sentiment is concerned. The CBN has to be clear. They must have clear policies and they must communicate this in a proper manner to the market. The second thing I'm going to recommend would be in terms of fiscal intervention. Like I said before, economic growth is also a very important factor that shapes macroeconomic sentiment. If the economy is growing and is performing very well, investors will have a big expectation about the economy. And this is where fiscal intervention comes in. The government must continue to intervene in the economy, through rolling out of funds to foster investments, rolling out of funds to build infrastructure and all of that. These will help consolidate more growth and will help improve macroeconomic sentiment. The last recommendation for me would be more of a long-term thing, and that would be for the government to look towards realizing more growth through more sustainable factors like technology, more sustainable factors like savings, more sustainable factors like capital dipping and all of that. So beyond just the first two recommendations, which has to do with policy credibility and fiscal intervention, which I think is a way of improving macroeconomic sentiment in the short term, I believe in the long term, the government can consolidate more growth by looking towards more sustainable factors like technology, like education, like more savings, capital dipping, infrastructure, sort of improve the economy and buoy macroeconomic sentiment.
Okay, talking so much about the central bank, of course, the Monetary Policy Committee is meeting this week. Somehow, they shifted their meeting to come this week instead of next week that was earlier scheduled. So what do you hope to hear from the committee this time?
So I think the idea would be to say what exactly does the CBN consider before they make a decision on policy rates. The CBN has clearly stated, the last 2-3 MPCs that they are big on growth. And if you look at, like I said before, the economy grew by 5.01% in the second quarter of the year. So it means that the economy is fully on track to recovery, right? The CBN would also consider inflation. Inflation has been coming down, printed at 17.38 in August as at the last print. If you look at the global outlook, which is also another thing that the CBN will concern, most of the global central banks we currently have are still maintaining the monetary policy accommodation stance that they've had since the outbreak of COVID. So by and large, I feel that the CBN will most likely keep most of the policy rates fixed to ensure that the economy realize more growth. Because if they sort of switch to an hawkish stance, I feel like that might sort of wear out some of the growth that is currently being realized. So I feel like they would most likely keep the rates fixed at levels where they currently are to sort of consolidate more growth.
Right. You cover the fixed income market as well. What are the expectations from that investors in that market as regards this week's Monetary Policy Committee? How are we likely to see the yield curve go this week?
Well, so most investors in the fixed income space they always want a higher yield, right? And so there will be much more in fear of a slash in rates, which, like I said, I don't see that happening. The best outlook for us at Chapel Hill Denham is they are most likely going to keep rates fixed. And I think that what this is just going to mean is investors will most likely maintain status quo in the markets. It also means that yes, we might see some sort of additional interest from fixed income investors, and that will sort of make the market more bullish, post the MPC decision.
All right, Michael, we'll be looking forward to that. We'll have to leave it there now. Michael Ogurami is a macroeconomist at Chapel Hill, Denham. Thank you for your time on Business Morning.
Thank you very much.